The next topic that we are going to discuss goes by the name CVP analysis or cost volume profit analysis. Now, this is an important discussion in your management accounting journey because it helps you to understand one very key concept called break-even point. The idea of break-even point basically helps us to calculate at what level of output or at what level of sales does the organization recover all its costs. So break-even point is that point where your total cost and your total revenue is the same. So you have earned enough revenue, you have sold enough units and earned enough revenue so that you have recovered all the costs associated with a particular product. Now, I'm sure you will agree with me when I say that variable cost is incurred only when the product is produced. If you have not produced anything, you will not incur variable cost. But fixed cost is incurred regardless of the level of output. Even if there is no output, fixed cost is still incurred by the organization. So the idea of break-even point basically has got more to do with recovery of fixed cost because variable cost will be incurred only when production takes place. If production does not take place, then there is no recovery of, then there is no question of incurring variable cost. And if there is no question of incurring variable cost, there is no question relating to recovery of the variable cost. The discussion on CVP analysis, or what we also call break-even analysis, is the study of the effects on future profits of changes in fixed cost, variable cost, sales price, quantity, and mix. The break-even point is the level of activity at which there is neither profit nor loss. So total revenue and total cost at this point are one and the same. But our emphasis though is going to be only on fixed cost. Now why? Because I told you just now, see, variable cost is incurred only when there is production. So, in an ideal world, what will any business do? You will indulge in production only when you know that you are expecting a sale. Only when you know that you will be able to sell, will you indulge in production. And no business entity will usually mostly sell below its uh, so you will not try to sell, you will not end up selling a product below the variable cost of production. So come hell or high water, variable cost is going to be recovered by a business entity. What is not going to be recovered, however, is the fixed cost. So the focus when it comes to break-even analysis is always going to be on recovery of fixed cost. A business entity engages in production only when it knows that it will be able to sell. So variable cost is anyway recovered whenever sale happens. Because see, the assumption in all our questions is going to be that selling price is greater than variable cost. And if selling price is greater than variable cost, then all the variable cost will be recovered. What will not be recovered or what will be a challenge to recover is the fixed cost, because fixed cost is independent of the level of output. Even if the output is zero, you are still incurring the fixed cost. So for our break even analysis, we are going to recover. Our focus is going to be on the recovery of fixed cost. Okay. Now, one important term that we studied earlier, I'm repeating it again. That term is called contribution. How do you calculate contribution? Contribution is calculated as sales minus variable cost. Why is it called contribution? Because it contributes towards recovery of the fixed cost. Okay, it is called contribution because it contributes towards recovery of the fixed cost. Now let's do an in-depth analysis of the idea of break-even point. This example that I have developed will be instrumental in your understanding, so please pay attention. Okay, let's delete some of the okay. Now, this is let's talk about a business which is producing an output, and the selling price per unit of this output is 50 rupees. The variable cost incurred is 30 rupees. and the variable cost incurred is 30 rupees. What is, and this data has been given to you. Now, we have to understand, is there a level of output at which our costs are equal to our revenue? Okay, this is the data that is given to you. Your total fixed cost is 20,000. Fixed cost does not change according to the level of output. Okay, so let's uh, let's keep all these points at a zero. Let's remove all the formulas and now let's understand how does the break-even analysis work. How many units are you producing? You are producing 400 units. And what is the selling price per unit? Selling price per unit is 50. How will you get total revenue? Total revenue will be 400 into 50 per unit, that is 20,000. What is the variable cost per unit? 30. So total variable cost will be 400 into 30, that is 12,000. Maybe, if I introduce another column here, let this be column A, let this be column B. Total revenue, I will call it column C, that is going to be A multiplied by 400 into 50, that is 20,000. Let variable cost per unit, let this be column D. Total variable cost is A, number of units, into D, variable cost per unit. Okay, now let's calculate the total revenue and let's calculate the total variable cost across all the levels of output. 600 into 50, 800 into 50, and variable cost also 400 into 30, 600 into 30, 1400 into 30. Okay, what is contribution? Contribution is selling price minus variable cost per unit. So if I have to calculate the contribution per unit, that will be my column F. Column F is column B, which is selling price per unit, minus column D, which is variable cost per unit. Total contribution should be column G. Total contribution is A, number of units, into F, contribution per unit. Okay, so let's do that. I have my total contribution. Okay, now I have my fixed cost also. H, column I is total cost. Total cost has to be total variable cost plus total fixed cost. Okay, so let's populate the column for total fixed cost. Total variable cost plus total fixed cost. And how do I get my profit? Profit is G, that is total contribution, minus H, that is total fixed cost, because contribution already was sales minus variable cost. So profit will be total sales, that is total revenue, minus total variable cost minus total fixed cost, one and the same. So contribution minus fixed cost is profit. Now, if you observe at this particular level of output, at what level of output? At the 1000 units level of output, my total profit is zero. Okay. So when I'm producing 400 units, okay, when I'm producing 400 units, I am losing all, I'm still making a loss. When I'm producing 800, 600 units, 800 units, I'm making a loss. Here, my total variable cost was 12, my total fixed cost was 20. So out of my total revenue was 20. I recovered my variable cost naturally because selling cost in all our examples is going to be greater than, sorry, the variable cost. Total contribution was 8, fixed cost incurred was 20. I was not able to recover 12,000 worth of my fixed cost. At the next stage, I was producing 600 units. Still, the loss of 8,000 was fixed cost. It was not recovered. Variable cost to recover ho gaya tha. Again, at the next output level, that is 800 units, there was a loss of 4,000. There was a loss of 4,000 units, and there's a loss of 4,000, not 4,000 units. There was a loss of 4,000, and that was again fixed cost not getting recovered. Variable cost recover ho raha tha. And in this one, at 1,000 units, your total at 1,000 units, if you see, your total contribution was 20, your fixed cost was 20, you were able to recover all your costs, and at this point, you were at a situation of no profit, no loss. As your output increases beyond 1,000, then you start earning your real profit. Till 1,000 units, you have not earned any profit. In fact, you are losing money in the business. Now, the situation is that if you don't produce anything, that means you don't sell anything. And but still and that means you are not incurring variable cost of 30. When will you incur variable cost of 30? When you produce something. When will you produce? When you have to sell. Unless you have to sell, you will not produce. So the point that I'm trying to make is at 0 units, the variable cost is also 0. But since I'm not incurring that cost, there is no question of recovering that cost also. However, even if I don't produce a single unit, I will still have to pay 20,000, which is my fixed cost. This cost I have to pay whether I produce 1 unit or I produce 20,000 units. But this cost is getting incurred regardless of the level of output. So that is where my concern lies. My concern is not about recovering variable cost because that will be incurred only when there is a sale. Variable cost will be incurred only when there is a sale. So I'm not concerned about recovering variable cost. I'm concerned about recovering fixed cost. And when sale happens, variable cost gets recovered because the standard assumption is selling price is more than variable cost. The problem is fixed cost. The moment you recover that, you break even. Okay, sales minus variable cost is called contribution because it contributes towards recovery of fixed cost. We had discussed this term also. Can I say that to recover fixed cost, I must sell those many units whose total contribution equals fixed cost? If you observe here, if I want to recover fixed cost, I have to sell minimum those units which will help me to recover my fixed cost, and which means the contribution generated from those units should be enough so that it helps me to recover my fixed cost. My total fixed cost is 20,000, so I should earn that much contribution which is equal to my total fixed cost of 20,000. Now think in a reverse manner, how many units should I produce so that the total contribution earned is 20,000. I know that the contribution per unit is 20. So, how many units will I have to produce? At break-even point, fixed cost is equal to contribution because how much money do I have to recover in order to make sure that I break even? Break even is a situation of no profit, no loss. And we already discussed recovering variable cost is never a concern for us. Recovering variable cost is not a problem for us at all. The problem is recovery of fixed cost. So you should earn enough contribution that it will help you to recover your fixed cost. Okay, you should earn enough contribution that it will help you to recover your fixed cost. So what is the total fixed cost here? Total fixed cost is 20. So the contribution that I earn should also be equal to this 20,000 only. Okay. So if I then need to know how many units to sell, I will be able, or how many units to produce and sell, naturally, I will arrive at my break even point. At fixed cost, sorry, at break even point, contribution and fixed cost are supposed to be the same. So the question is, for how many units should I sell so that my contribution is 20,000? I know that my contribution per unit is 20. The total target contribution that I need to earn is 20,000. So the number of units to be sold should be 20,000 upon 20, that is 1,000. Okay. So to calculate my break even point, I need to know how much contribution should I earn. That contribution was 20,000 and denominator was contribution per unit. So my break even point ka formula can be total target contribution upon contribution per unit. But I know that at break even point, the fixed cost is equal to contribution, because what I'm trying to recover is my fixed cost. So that is equal to my target contribution. So whenever someone asks you the formula for break even point, it is calculated as total fixed cost upon contribution per unit. I'm going to give you one sheet with all the formulas written together. Okay, now just for a minute, observe this. Okay, these are units, total revenue, total cost, and profit. Now, the total revenue calculation, and we have taken all these calculations from above. Okay, now what I have done is I have tried to plot this on a graph. If you observe, before 1000 units, you are in the danger zone. You are not safe. Why? Because you are incurring losses. If you are incurring losses, and I am plotting all the profit, revenue, cost values on the y-axis and number of units on the x-axis, you observe before 1000. Okay, before this 1000, you are in a loss zone. Okay, you see, you are below zero, that means you are in a loss zone. At 1000, your line cuts the x-axis. At this point, you have no profit, no loss, and beyond 1000 units, you have earned a profit. And observe these two lines also, the total cost line and the total revenue line. Earlier, the total cost line, which is given in red, is above the total revenue line, which is in blue. So cost is more than revenue. This the distance between the two lines keeps on getting shorter, and when you reach 1000 units, your total revenue is equal to total cost. And beyond 1000 units, the gap widens, but in the opposite direction. The total revenue is more. You see, blue line is above the red line here. So this is a situation of profit. Your revenue is more than the cost. Okay. So this is the basic graphical representation of a break-even point. Now this I have presented, like a blocked graph. Here again, this is your break-even point. This part represents your total cost, the green shaded part. The red part, of course, is your total revenue. It overlaps here. But if you want to look at the break-even chart, this is what will give you a complete picture of what does the break-even analysis drawing look like. So sometimes what they do is they give you a graph and they ask you to interpret the graph. Naturally, they cannot ask you to make a graph because 60% of your paper is MCQ. The remaining 40 part is descriptive. But again, there you don't have any capability in an online exam to draw a graph. So you will never be asked to draw a graph. You will only be asked to interpret graphs that are given to you. Okay. So this is your, so this zone, this point where you cross the break even point, that is known as the safe zone or the margin of safety. This is, of course, the red zone or the danger zone. This is a situation of no profit, no loss. Now, uh, one important formula that you need to understand, that formula is called the CS ratio. Some books also call it the PV ratio. What is CS ratio? It is C is contribution, S is sales. So contribution upon sales is known as your CS ratio. Okay, so this might be asked in a lot of different, this is an important ingredient in a lot of calculations. Now, if I were to show you how costs appear on a graph paper, okay, at 0 units, the fixed cost is 20,000. At 400 units, also the fixed cost is 20,000. At 1400 units, also the fixed cost is 20,000. So, if I have plotted the number of units on the x-axis and total cost on the y-axis, the cost is the same regardless of level of output. So at यहाँ से लेके यहाँ तक, okay, for all the units, the fixed cost is the same. Hence, it is shown as this green line, which is parallel to the x-axis. On the other hand, the total cost, see, the variable cost will be incurred only when output is incurred. Okay, so when output is zero, variable cost is zero. As the output increases, the variable cost also increases. And the total cost is the sum of the fixed cost and the variable cost. So that is shown as a, your total variable cost is this line. Okay, and this is the total cost line. Okay, this is your uh, this line, blue line is your total cost line. This is your total variable cost line. So this doesn't change regardless of the level of out. So total fixed cost does not change regardless of the level of output, but your variable cost changes as the output changes. It is directly proportional to the level of output. Fixed cost does not change with the level of output. Variable cost, if the output increases, the variable cost also increases. That is the basic idea that you need to keep in mind for the relationship between different cost. Okay, this is how your diagrammatic depiction looks like. Now, let's let's start understanding how are different calculations done and what do we need to do. Simple application of formulas, then there will be a formula sheet, and then we'll build on that and we'll be doing many more multiple choice questions. Okay, have a look at the question. The following data relate to product PQ. Selling price per unit 25, variable cost per unit 20, fixed costs are 50,000. Calculate the number of units that must be made and sold in order to break even. Number of units that should be made and sold. Now, this is a very simple formula that you will have to learn. So, in part A, they are asking you break even point in number of units. Okay. Break even point in number of units. This is fixed cost upon contribution per unit. This is a formula I expect you to learn. Fixed cost divided by contribution per unit. Selling price per unit is 25, variable cost is 20. Let me quickly write down here. Contribution per unit is equal to selling price per unit minus variable cost per unit. 25 minus 20, that is 5. Okay, so total fixed cost is 20,000. Is it 20,000? No, 50,000. Sorry, my bad. It is 50,000. So how will you calculate your break-even point? The break-even point will be 50,000 upon 5. That means break-even point is 10,000 units. So this is the first of the many formulas that we are going to learn. What is the break-even point in number of units? It is fixed cost upon contribution per unit. Here in this discussion, we also understood why is the formula made this way. We spent some 5 minutes in understanding the logic or the reason behind this formula. In my formula sheet, the first formula I'm entering is break even point in units is fixed cost upon contribution per unit. Okay? Okay. Now, second part of the question, calculate the level of activity that is required to generate a profit of 40,000. Now, uh, let's work on it logically and then we'll approach it with a formula. But this part I'm doing logically with you because I don't want to give you a formula without telling you uh, how to or why is it made that way. Target profit 40,000. Okay. Target profit is 40,000. Okay, what is the profit that I need to recover? 40. Profit, see, you will be able to earn profit only when you cross the break-even point. है ना? Break-even point, if you observe in this diagram, break-even point is after, you know, the no profit no loss is the break even point. You earn profit only after the break even point. So when they are saying that the total target profit is 40,000, that means you have already crossed the break even point. ठीक है? You can earn profit only after you have crossed the break even point. Okay, you can earn profit only after you have crossed the break even point. So when the target profit is 40,000, that means I must recover the fixed cost of 50,000 and then go ahead to, excuse me, earn 40,000 profit. So, target amount to be recovered. What is the target amount to be recovered? Target amount to be recovered is 50,000 fixed cost plus 40,000 profit. That is 90,000. And now the question is, how many units should be produced so that we earn a target profit of 90,000? The answer is, how many units should be produced? 90,000 divided by contribution per unit, that is 5. The answer is 18,000 units. 90,000 divided by contribution per unit, that is 5. So when I'm talking about uh, target profit to be recovered, this is how the calculation goes. 90,000 divided by contribution per unit. So level of activity to get a desired profit, answer when you require that in units is required profit plus fixed cost upon contribution per unit. This is the second formula that I would want you to learn, which is 90,000 upon 5. Okay. ठीक है. So this is the number that we are looking at. This is the second formula of the many formulas that you are going to learn. What is the formula that we are talking about? Number of units that you need to produce to get a desired profit. That is required profit plus fixed cost divided by the contribution per unit. Okay, now the third part, the company budgets to sell 13,000 units of the product PQ, calculate the margin of safety. What is margin of safety? How far ahead of the break even point are you? We saw there when I'm talking about margin of safety, basically the point beyond the see beyond the break even point is my safe zone. Okay, the point beyond the break even point is my safe zone. So the moment I cross the break even point, I arrive at a situation of no profit, no loss. The moment I cross the break even point, the moment I cross the break even point, which is a point of no profit, no loss, once I go beyond that, I am in the safe zone. So this safe area is known as my margin of safety. ठीक है. Margin of safety for the company is budgeted level of sales minus break even sales, and margin of safety in percentage terms is budgeted sales minus break even sales upon budgeted sales into 100. Okay, so the company budgets to sell 13,000 units. Calculate the margin of safety. So I could have two formulas here, one for the number of units calculation and the other for the percentage calculation. So margin of safety in units is 13,000 minus 10,000. That is 3,000 units. This is my margin of safety in units. And if I need the margin of safety in percentage, how much is it? Budgeted sales minus break-even sales upon budgeted sales into 100. So margin of safety in percentage terms is budgeted sales 3,000 upon, sorry, budgeted sales minus break even sales 3,000 upon budgeted sales into 100, that is 30%. Now what does this number indicate? This tells me by how much will my budgeted sales have. So budgeted sales break even sales से कितना आगे है. So how much safe zone am I in? This tells me, see, what does it also tell me? Ki right now my budgeted sales are beyond my break-even sales. So my budgeted sales will have to fall for me to enter into a loss situation. And as compared to my break-even point, they need to, sorry, the denominator was budgeted sales. So it is not 10,000, it is 13,000. Sorry, my mistake. How will you get this? It's basically 3 upon 13, 23.08%. 23.08%. ठीक है. What does that mean? That means my budgeted sales will have to fall by 23.08% for me to reach a situation of no profit, no loss. That is my safety net. Okay, margin of safety is my safety net. If it falls beyond this number, okay, if it falls beyond this number, then I will be in a loss situation. So, margin of safety is 23.08%. That means my safety net is 23.08%. So, and my budgeted sales are 13,000 units. Even if my budgeted sales fall by 23.08%, I have nothing to worry. ठीक है. Even if my budgeted sales fall by 23.08%, I have nothing to worry. So fall by 23.08% is 13,000 into 23.08% कितना आता है? So this is 13,000 into 23.08%, 3,000. So even if my budgeted sales fall by 3,000, I don't have a problem. 3,000 or 23.08% is my safety net. If the budgeted sale falls by more than 23.08%, then my output, then my sale goes below 10,000 units. Okay. And below 10,000 units, I enter the loss zone. This so till 10,000, even if my output falls, I have nothing to worry. If it falls beyond that, then of course there is a problem. So this is your interpretation of the concept of margin of safety. Okay, just have a look at it once. Okay, have a look at the explanation, read it carefully, and then, of course, we will move to the next discussion, which is again more numerical questions. This is full numerical. You will enjoy this topic, trust me. Just go through it, go through the explanation, and then we'll start with the next point. Part D, calculate the contribution upon sales ratio for product PQ. This is an easy calculation. Part D is an easy calculation, not that the others were difficult, so to say. Part D, contribution upon sales ratio. Contribution per unit is 5, sales is 25. This is 20% contribution upon sales. Okay, then calculate the break-even point again, this time expressed in terms of sales revenue. Okay, I'll show you two ways of calculating this. Part E, break-even point in sales revenue. This is break-even units into selling price per unit. Break-even units कितना है? Break-even units is 10,000 into selling price per unit, that is 25. This gives me a number of 2,50,000. And there is yet another formula for break-even point in terms of in sales revenue. How does that work? This is fixed cost upon CS ratio. Okay. How does this formula work? This formula works as break-even point upon CS, sorry, fixed cost upon CS ratio. Okay, so fixed cost is 50,000 upon CS ratio 20%. This is 2,50,000. If you want, after the session today, I will derive this formula for you separately. It's basically an offshoot of the same formula. I'll derive this formula for you. अभी दिखा देता हूं. ठीक है. So break-even point in units. Okay, this is fixed cost upon contribution per unit. Okay, so break-even point. Now, if I want this, if I want the break-even point in sales revenue, I can simply multiply by what? I can simply multiply both sides by the selling price per unit. Okay. If I want the break-even point in sales revenue, I can simply multiply both sides by the selling price per unit. How will that be? I will say break-even point in units into selling price per unit on the left hand side. And see, the rule for equations is always, whatever you do on one side, you have to do on the other side. Only then it will tally. So here you have fixed cost upon contribution per unit into selling price per unit. Now, let me rearrange the into selling price per unit. Okay, let me rearrange this a little. Can I say fixed cost divided by contribution per unit? Can I show this as fixed cost into 1 upon contribution per unit? Does it make sense to you? Fixed cost into 1 upon contribution per unit. ठीक है? Into 1 upon contribution per unit into selling price per unit. Okay. So what do you have? You have selling price upon contribution per unit. Your CS ratio was how much? Your CS ratio was contribution upon sales. This is the opposite of that. So can I say here that break-even point, now let me call it break-even point in dollar terms. Okay. In dollar terms is fixed cost into, can I now write this as selling price upon contribution per unit? This is the inverse of CS ratio. So break even point in dollar terms will be fixed cost divided by CS ratio. Now the derivation is not so important because ultimately in the exam you will have to remember the formula. So whenever they ask you to calculate the break-even point in dollar terms, it will be fixed cost upon CS ratio. Simple, no complications. And calculate the sales revenue that is required to generate a profit of 40,000. Sales revenue to get a desired profit is desired profit plus fixed cost upon CS ratio. Sales revenue to get profit of 40,000 is 40,000 plus 50,000 upon CS ratio 20%, 90,000 upon 20% must be 4,50,000. You will get the same answer if you multiply the output. How much units did you calculate? You calculated 18,000 units. Multiply 18,000 with 25, you will get the same answer. That is 4,50,000 units. So your entire discussion of the break-even analysis is going to be, centered around these formulas only, nothing more, nothing less. Now, I want you to spend a minute and go through the formulas, and of course you will get the sheet, so there's no need to worry, but make sure that you have learned and remembered the formulas. ठीक है? आपको formulas याद करने पड़ेंगे. In the exam, this is a sure shot way to succeed. Learn the formulas, move ahead. Learn the formulas, move ahead. No complication, no confusion. Even in multi-product BEP that we are going to see a little later, even in multi-product BEP, I will tell you a couple of tricks that you have to remember. Follow that and you will get the answer. Okay, so let's continue here. A company manufactures product RS Each unit of RS sells for 100. Variable costs are 60 per unit. Fixed costs are 2,50,000 per unit. The company budgets to produce 12,000 units in the next period. Scenario 1, you have to calculate the break-even point expressed in units and dollar of revenue, the level of activity required to generate a profit of 90,000 units. You have to tell this in units, and the margin of safety as a percentage. Okay. So how do we go about it? First part is very clearly formula based. So you don't need to apply too much of your mental faculties to this question. Okay, so what is the most important calculation for all these discussions is contribution per unit, which is selling price per unit minus cost per unit. Selling price per unit 100 minus 60, that is 40 is the contribution per unit. Fixed costs are 2,50,000. Okay, so always write down the formula. Break-even point in units is fixed cost upon contribution per unit. So break-even point in units. Do this calculation, guys. See how you get the value. Fixed cost 2,50,000. Contribution per unit 40. How much is it? 2,50,000 upon 40. That is 6,250 units. Okay. You need this in terms of revenue also. You have calculated the contribution per unit. Let us calculate the CS ratio. CS ratio में 40 upon what is the selling price? 100. That is 40%. So break-even point in revenue is fixed cost upon CS ratio in dollars. ठीक है. So break-even point in डॉलर कितना होगा? Fixed cost 2,50,000 upon CS ratio 40%. 2,50,000 upon 40%, that is 6,25,000. This is how the calculations work. Okay, this is $6,50,000. Scenario 1, the level of activity required to generate a profit of 90,000. Okay, so the level of activity to get desired profit. This is desired profit plus fixed cost upon contribution per unit. Okay, so this is how much. How much profit are you looking at? 90,000. Okay, so level of activity to earn 90,000 profit is 90,000 plus fixed cost 2,50,000 upon what is your contribution per unit? 40. 3,40,000 upon 40. That is 8,500 units. Okay, 8,500 units is the level of activity. If you now need to convert it into sales revenue, multiply that by 100 and you will get your answer. Okay, now margin of safety as a percentage. Margin of safety is budgeted units minus break-even units upon budgeted units into 100. So margin of safety as a percentage. How do you calculate this? This is budgeted units minus break-even units upon budgeted units into 100. So 12,000 was the budgeted sale, 6250 upon 12,000. Your answer again has to be in percentage terms. 47.92 is your margin of safety percentage. Scenario 2 is illustrate and explain the impact of a change in selling price to 120 per unit on BEP, level of activity required to generate a profit of 90,000, and the margin of safety expressed in units and in percentage terms. So scenario 2 is similar to scenario 1. So I would want you to try it out on your own, and then of course I will give you the solution. Same formula, same everything, but just when they say illustrate and explain the impact of a change, what does that mean? Uh, you will have to say, for example, the break even number of units is less now in scenario 2. आपका कम में काम हो रहा है. What does it mean when the break even point is less? You are able to recover the fixed costs earlier. So you will have to say whether the break even point has come down or it has gone up. So that is one thing you will have to do. Okay. Now let's look at this particular graph. This is a very important question, because not this question might not be tested in the exam, but similar questions are asked in the PM paper. Okay, so what they have done is they have given you a graph. Okay, swim company offers training courses to athletes and has prepared the following break even chart. So what you have to do is you have to analyze the chart. Okay. Now in analysis of the chart, just have a look at it for a minute. Just देखो एक बार. ठीक है? Don't do anything else. Just look at it once. Take a minute and then we'll discuss it together. What does each line mean? Okay. Take a minute for this. Okay. Let's now understand how this part also works. Okay. They have asked you analyze the chart. Okay. If you understand how this chart works, you will be able to understand other charts also. Now, if you see here, what they have done is they have shown the dollar sign, which means the y-axis is about all items which are expressed in dollars. What is expressed in dollars? Cost, sales, profit, everything. All of that is on the y-axis. Okay, now the x-axis is basically if y is dollar, x-axis has to be the number of units. Okay, now let's understand how these things work. Look at line A. Observe line A. Follow the cursor here, here. Line A ends at origin, that is 0, 0. If you move back along the line, you will see that it stops at the origin. It stops here. So at some point, this line has coordinates 0, 0. So 0 output पे 0 something. ठीक है. X coordinate means units are 0. Y coordinate means all the dollar values are 0. ठीक है. This indicates that this is your sales line. or it could be your total variable cost line. It could be one of the two. Either it can be sales or it can be your total variable cost. Fixed cost हो नहीं सकता. Why? Because at output zero, fixed cost is still incurred. And if you observe this line, if you come back along this line, it is 0 0. It passes through the point 0 0, which means at output 0 the dollar value is 0. Output 0 and dollar value 0 कब होगा? When either it talks about sales or it talks about total variable cost, one of the two. ठीक है. Then look at line C. देखो आप, line C. ठीक है, it goes here and comes here, 20,000. This is your line C. At output 0, the dollar value is 20,000. Okay. Now the dollar value changes once when you go from 100 to 200, the dollar value changes, but then again it remains constant till the end. So although there is one change, this is stepped fixed cost. This type of fixed cost is known as stepped fixed cost. Now this means this line has to indicate the total fixed cost. Why does it have to indicate total fixed cost? Because see, at output 0, this line has a value of 20,000. As in, at output 0, the dollar value is 20,000, which means this has to be fixed cost. Okay, now look at line B. See here. Line B, if you observe, as the output increases, the value of line B also, so the line B ka numbers are also increasing, right? At 0 units, it is 20,000. See, at 0 units, line B cuts the y-axis at 20,000, which means at 0 units, the value is not 0. So this cannot be total variable cost. This has to be total cost line. Why total cost line? Because see, it is increasing as the output increases. So it has that impact of variable cost also. And at output 0, this line is at indicates at 20,000, which means the line B is your total cost line. See, line A is above line B. ये देखो यहाँ पे line A is above line B. Had line A been the variable cost line, it would have never been above line B. It would always have been below line B because total fixed cost is always greater than the total variable cost. So line A, we had kept two options. Either it is sales or it is total variable cost. Very clear it is not total variable cost. Why? Because it is above line B at some point, which can never happen. Total variable cost will always be less than the total cost. So line A is sales, line B is total cost, line C is total fixed cost. What is break-even point? Break-even point is that point at which we have a no profit, no loss situation. Okay. Now no profit, no loss situation matlab the total cost line and the total cost line and the total revenue line will intersect each other. They will intersect each other at this specific point. Okay, this point is your break even point. Why? Because total cost line and total revenue line have intersected each other. Trace it down to 300. At 300 units, you will have your break even. And at 300 units, the total revenue is 90,000. So this is the break even point. Okay. And what does the question say? Also state the break even sales revenue, which we did, and the company's profit if 500 athletes attend a training course. When 500 see 500 athletes means here. Okay. This is 500 athlete. Then when 500 athletes have come up, oh sorry, 500 athletes come up straight. This is your revenue. Your revenue could be somewhere approximately around 140. देखो around 140 है. Revenue is 140. Cost is ये देखो 120 और 130 के बीच में है. I'll focus on this even more. See, it is somewhere between 120 and 130. But observe this point. Huh? Is it exactly halfway or it is less than halfway? It is somewhere less than halfway, right? It is not 125. 125 से थोड़ा सा कम है. So revenue is 140, but the cost is a little less than 125. Exactly midpoint पे cut नहीं कर रहा है. So if I have to estimate my profit, it will be 140 minus some value below 1,25,000, say 123, yeah, 124. So profit is 17,000, 140 minus 123. But what they have asked is quoted to the nearest 10,000. What is the nearest 10,000 value? 20,000. 20,000 is the nearest 10,000 value. So this is where the uh, profit estimation will be. I'll again walk you through this question. See, the revenue is 140, but the total cost is, see, it is above 120, below 130, but it is not exactly in between. Midpoint से थोड़ा सा कम है, which means now that the total cost is say 124 or 125, yeah, sorry, 124, 123, anything. If it is 123, profit will be 17,000. If it is 124, profit will be 16,000. But the nearest 10,000 is, nearest 10,000 value का multiple is 20. तो आपका profit is 20. आप कुछ भी पकड़ो, 123 पकड़ो या 124 पकड़ो, even if you took it as 122, this profit ka estimated value will still be 20, because they have said round it up to the nearest 10,000. So this is how you read a graph. Okay. Now reading a graph is a very important skill when we are doing break even point, when we are doing limiting factors and other topics also. Reading a graph will be super important.